Hello all, I hope you are well in these very bizarre and extraordinary times. I'd like to welcome you all to the Fintech Finance Virtual Arena where we are hosting you today. I'm joined by two special guests today. First of all, Freddy Kelly from Kudos. How are you doing today, Fred?
I'm very well, thank you. I'm very well. Thank you for having me.
Excellent, excellent. You're everywhere this week. I think you're joining our friends at 11FS on the breakfast show Thursday.
Yeah, I've got to get up really early, early for quarantine. It's 8:15, so straight out of bed into the webcam. Hopefully, no one notices my bed hair. But yeah,
I'll make sure I comment on that. And also joining me, we've got Paul Norgrove. I'm pronouncing that right?
Yep, that's correct.
From Police Credit Union. And I know that there's, because you seem to have branched out now and doing stuff in the prison service, stuff in military.
Yep. So we're fully branched out now under the umbrella brand of Serve and Protect, with a couple more to come. So we're scheduled to launch Fire CU and Health CU very shortly, and that sort of will complete our cohort of credit union services for everyone that serves and protects the nation. So obviously very relevant in these times, but yeah, all things go here.
I was going to say, I imagine at these times there's a lot of attention on what, because I've been saying this on every single one of these videos, I am most certainly not a doctor, so I want to be able to do what I can, and begin kind of various enabling as many people as I can. Our friends at Flock, for example, they are insuring any drones that are helping against the coronavirus for free. We've all kind of got to do what we can, and the fact that you're kind of expanding into other bits of different services is a bit of a testament to that.
Yeah, absolutely. I mean, it was part of our mission already to go down that route, but we sort of made the call a couple of weeks ago now to sort of accelerate the development, brief our teams and designers, and it's been an experience, but we're sort of speedboating there as fast as possible, and we hope to be launched by the end of the month. So exciting times for sure.
Excellent. Now, one of the reasons I want to get you both on here, of course, is I received a cool little press release about something called the Affordable Credit Challenge. Freddie, what is this? What is this challenge?
So the Affordable Credit Challenge was set up by Treasury back in summer of 2019, and it was delivered by Nesta, the government challenge body. Essentially, it was looking at the challenges of financial inclusion or exclusion, depending on which side you look at it from, and how the fantastic credit union network that we have in the UK can team up with fintech businesses such as ourselves to better deliver credit and more efficiently deliver credit to those people that need it, and particularly in light of the sort of gaps in the market that are being created by the exit of certain high cost lenders and certain areas that are sort of underserved by the market. And the thesis is really that with sort of partnership between the tech of us and the lending know-how and scalability of guys like Paul and others, we can build and deliver some new products and launch them, and the government's going to sort of pay for us to do that by giving us a sort of small grant and a challenge prize for those people that make it all the way through to the end.
Excellent. And Paul, how did you guys get involved in this?
Well, we've been working with Freddie and the team for a couple of years now. I think we were one of the first in the credit union space to look at more traditional means of assessment, and really the sort of launch of open banking and what Freddie and the team at Credit Kudos were doing was, we were really invested in that style of assessing lending already, where we didn't necessarily want to look at credit score. We still traditionally underwrite based off the individual capability to borrow, and the sort of early strides into open banking with the consolidated view of people's financial statements was something we were already working on, and then we just share a relatively similar ethos in terms of, if we can make a better financial decision and improve financial behaviours through technology, we help more members and the underserved, and obviously the development that Credit Kudos has gone through in the last 2 years in particular is phenomenal, and really it was an obvious choice to reach out to each other and say, should we look to get involved and do something different in this space? And it's been a success for both organisations, which is great.
You mentioned financial inclusion there. Um, I'm quite an advocate of this because that too often is almost regarded as the 1.7 billion people in the world that don't have a bank account, but I think it's a bit deeper than that. Um, Example I always give is a friend of mine. They work for the NHS, and they were in the middle of buying a house, but because they just started at a different hospital compared to the one they were at before, they weren't able to. They had to basically wait 3 months before they could apply for a mortgage, despite having a year at a previous hospital. And that just to me seemed a bureaucratic problem as opposed to actually an issue with them. What are some of the issues that are facing police officers and soldiers that people don't really think about when it comes to things? Because I mean, in some ways, it's a very stable job. You'd expect it very straightforward to get a mortgage, for example. What are some of the issues facing this segment of people?
I think when we moved into the military in 2015, we knew that they were classed as high risk in the traditional spheres of finance. But what we actually saw is, that they have the means to pay, and they're, for the most part, very well cashed. The hardest issue they face is a thin file. So the sort of traditional means of acquiring credit meant that mainstream finance companies would look at a thin file and go, they're either going to be priced completely out of the market or excluded completely. So it sort of was driving them towards high cost credit. And what we were finding is that we were sort of getting to them all too late in the process. So they were recruited into the army from 18, and sort of by 2021 their files have been decimated and they're going to struggle for life. And similarly in the police, with relocation very early on in their careers, they're accumulating quite a lot of credit early on. And really where we sort of cut our bread and butter on the other side of the spectrum is through consolidation. So we were looking at, sort of giving people not an out as such, they were servicing their credit, but if we could put, £200-300 a month back in their pocket, it removes that vulnerability, or at least eases the vulnerability on needing to access high cost credit when times get tight, or withstand an event in their life that is going to cause a shortfall. So as you say, it's not as obvious to the sort of wider public on what the challenges those industries face, and it's something that we're learning every day, and through events and products like we're working on at the moment, then we can actually help more people, which is obviously our mission.
So Freddie, on that level, that's where you guys come in, isn't it?
Yeah, absolutely. So there were a couple of things that we wanted to kind of tackle with our application. So just to step out, basically application sort of opened in July of last year. There were an initial set of 6 partnerships between fintechs and lenders announced in November, of which we were actually participating in 2 of those partnerships. And then in March, just gone, the final 3 winners were selected, who received further grant funding or prize funding from Nesta and from the government. And happy to say that we, with PCU, were part of that final winners selection, which is fantastic, and a great result for us in the work that we've done. I guess the challenges we were trying to solve were kind of twofold. So, as Paul mentioned, a lot of people in their kind of potential applicant pool have thin credit files, so that they have sort of insufficient information, which makes it really hard for any lender to give them an accurate decision on their risk, essentially. And so invariably a lot of these companies will have to just charge a higher rate of interest or reject that customer outright, and that's why you get this kind of vicious loop of people going to sort of higher and higher cost forms of credit that are further impacting and worsening their credit position. And so the first challenge that we wanted to solve was, how do we enrich the data that PCU and the Serve and Protect Credit Union are using to assess the customers that they receive already, so that they can improve the quality of that decision making, so understand real-time income and expenditure and probability of liquidity in the customer's account, and all kinds of different indicators that the Credit Kudos platform can provide, so they can understand those and use them in a decision, and then also scale up that decision, because right now, as with most credit unions, a police credit union particularly, very digital first, but a lot of them rely on a face-to-face relationship, which is increasingly challenging, especially right now. But because of that, their bandwidth for applications is limited, and so you end up with this unfortunate situation where they're getting a lot of customers that they have to turn away just because they don't have the manpower to process them. So in our sort of first phase, we wanted to solve those two problems. Basically, we wanted to say, how can we automate decisions and make the quality of decision making better, and then also reach more people. And so we decided to build basically a technical integration with PCU's lending application process, and also a custom decision making system that would allow them to really quickly identify the signals that they already use in their lending policy, but based on open banking transaction data, and therefore that they could automate their decision. So that was kind of phase one that we delivered and built, and I'm sure Paul can talk about the results we've had from that and the numbers. But the second phase, just to bring it back to the overall timeline of the competition, was to then take that one step further and deliver a new product to the market, which would essentially come in the form of what we called a reward loan, which was essentially a loan that we would be granted to a customer that previously perhaps wouldn't have been eligible, but it would be granted to a customer that's perceived at a higher risk, at a higher interest rate as a result. But then over time, by monitoring that customer's behavior using Credit Kudos and using open banking data, we'd basically recognize that individual had hit certain milestones and kept their creditworthiness in a healthy position based on that data, and therefore we could then, at the end of the cycle, assuming that all those criteria had been met, we could reward back the interest difference between the standard product and the reward product. So they effectively, at the front end, the lender PCU is sort of de-risked because they're lending to a slightly more high-risk customer, but then that customer also gets a really great deal that they couldn't get anywhere else because they get the opportunity to kind of get that interest back at the end of it. And the idea was that we could pilot this project and build the technology to deliver it with PCU, but then, as is the goal of the challenge, we could build that in a way that could scale to many other community lenders, other credit unions, that they could use the same technology platform. And so that's kind of like the high level. I'll hand over to Paul perhaps to talk about the actual results and where we're up to on that.
Fantastic, thanks, Freddie. So we've launched it. The phase one product has gone really well. We were sort of pushing it towards the new recruits that were going through two of the main training bases in the army, and what we found is, a huge appetite to pitch it as sort of early access to credit, and it has reduced our decline rate, reduced our not pursued, increased our engagement strangely with both members, consumers, but also the key stakeholders, because salary deducted lending is nothing new. Credit unions have been doing it for a very long time across the globe, and obviously there's lots of disruption in that marketplace through other fintech providers. But the one thing that they did, which shook up the credit union space, was they provided value to the stakeholders, and obviously the data that we've managed to accumulate via Credit Kudos around gambling really raises awareness for, dare I say it, the more experienced person sat in HR or the key decision makers that are going, well, none of our personnel have issues with gambling, or none of our people have issues with high cost credit, and really we've sort of seen two-factor success of the project. Not only that we've been able to say yes to more people and help them and get them into healthy borrowing cycles, but also provide value back to the key stakeholders around their financial behaviour of the people that they're employed to do a particular job for the nation. And we've done some research directly with key stakeholders and their members, and the last thing they need to be worried about is their money during that time. So it's been sort of a double-edged win for us, and obviously to receive the funding back and to continue the development of the project. We believe passionately about it that until someone can give someone an opportunity to get on the credit ladder in a responsible way, those that will service the level of debt, great, they'll be rewarded. But also, as Freddie said, it's massively important to de-risk us as an organisation, as a non-profit. we're there to help and protect our members' savings as a true mutual. So we see it as an absolute win-win. And I think our decline rates have come down significantly in that space. So long may it continue, and to see what phase 2, 3 brings of this product. We're really excited about it.
Also, with less decline rates and being a lot safer lending out, it means hey, you've got more money to lend out to more people.
Yeah, exactly. And that's one thing that I should say for us. I mean, our delinquency is extremely low anyway. But what we really wanted to do is challenge the internal dynamics of the credit union. Being a traditional credit union for a long, long time, I dare say that it took some persuasion of our staff who have traditionally underwritten for years to sort of trust in the tech. And that's one thing that I have to say about what's been developed is it's a very humanized solution. It's not just a yes, no. It's, you can see the data and you can see the patterns of behavior. And that was huge for us. If we just wanted a decision tool that was a yes, no, we'd have gone and got one off the shelf. But that's not where we want to go. We want to make informed, individualized, humanized decisions for our members who are the ones in need or the ones that have a core purpose to borrow. So, I think that goes without saying that what the guys at Credit Kudos are developing is changing how people assess creditworthiness on a mass scale. So, credit to the guys.
With that in mind, one thing I don't know the solution to this, but if you have somebody that historically can't get this loan, so they go for somebody with a higher percentage, they then have to go for someone with an even higher percentage and higher percentage. How do you get off that? What's the end game there? Is either seems to be, bankruptcy seems to be the only way out of that. What's the way out of that ever increasing percentage?
Oh well, unfortunately, there's not a solution there for everyone. I think it comes down to the classic: prevention's better than the cure, and setting up good borrowing behaviours early on in people's working lives, but also education during. And that's one thing that we're yet to figure out in terms of how far could this product go, because it might not necessarily be driven in terms of giving people a reward, but could this be derived and aligned with normal lending practices for the mass consumer? You've seen it with the likes of Monzo when they do My Monzo Year and they give data back to the consumer, just to make them aware that they've spent, £2,000 this year in Starbucks and other bits and pieces. But until you present the consumer with the data, and the educational piece of it, I think some people are just unaware, and I think that's the true scope and scale of open banking in terms of personalized financial experience. I think you can and will get some real rich data back to the consumer and educate them during their borrowing cycle. I think capturing the ones that have already tipped is difficult, but I think it comes down to if we can serve the blue chip, traditional blue chip, the middle ground. If you're serving those extremely well, there doesn't need to be some super alternative high cost lender for them. There should be enough resource within the organization to then support those on who are, and take more risk on those who are already tipped and are struggling. But you need to be profitable first. Even as a non-profit, you have to be profitable first to be able to be far reaching. Whereas, we don't want to go down the traditional where there's money route. We want to serve everyone well, and they all need different products, but they all need the information back to make better informed decisions for themselves. And that's what we're hoping to achieve moving forward.
With that in mind, let's talk a little bit about open banking, because it's sometimes one of those terms of, sprinkle a little bit of open banking on top of that and you're sorted. But it is something that is making a difference, because I don't think you could have anything like this 10, hell, even 5 years ago. So how has it really enabled solutions like yours, Freddie?
I mean, it's a massive component of what we do. Our business has existed for just over 4.5 years, and we started before open banking existed. It was kind of an idea, a concept, and I came from working in the US market where open sharing of data was much more prevalent, albeit without sort of regulated APIs. And it's, as Paul says, it's kind of unlocking data that already exists that consumers don't have access to. this whole idea that we should be custodians of our own information and use it to get maximal benefit is hugely enabled by open banking and open finance, and our business is predicated on that idea. You know, the consumers, traditionally they never sign up for a credit reference agency. They don't sort of say, oh, I want to sign up for this one, not that one. I love this. I love their logo, whatever. It just sort of happens in the background through this sort of implicit consent that you might hear people talk about in terms of data protection law, and that doesn't seem right. And now open banking is here. We can really say that consumers can say, well, actually, I want to apply for a credit with PCU, and I want to share my data with them for over secure rails for a specific period of time, so they can give me a bespoke and personalised treatment that I wouldn't get anywhere else, and that is hugely compelling for customers. And it's just sort of starting to tip the scales in terms of the lending market. We've seen massive growth in the last couple of years as a result of this. It's certainly taken its time, and I think there has been a lot, like you say, there's been a lot of sort of naysayers in the open banking press about no one's heard of it, if people don't want to share their data. But if you look at the reality, if people have a clear value proposition, i.e. we'll give you a better interest rate, we'll give you a more bespoke product if you share this data with us, then absolutely people will say yes, and it's putting them in control of the data sharing rather than it being taking place behind their back. So I think it's a kind of step change moment for credit referencing and for lending, and particularly right now, given all that's going on. There's so much uncertainty around consumer financial situations at the moment, and arguably the FCA is very consumer centric in the way they regulate, rightly so, and a lot of thought has been put into how people understand vulnerabilities of customers, and not to sort of broad strokes it, but to some extent everyone's vulnerable right now, right? We've all just been sent home, and we don't know what's going to happen. So to be able to continue lending intelligently and treating customers fairly and doing things correctly, I'd argue that right now open banking is almost a necessity to be able to do that, and that's certainly what we're seeing reflected in the market. So it's hugely powerful, and I think it's about to have its real moment this year and next.
Absolutely. Well, I do want to touch, the last thing I want to kind of cover is that exactly. We've got to talk a little bit about Corona. How well positioned do you think that this kind of niche of the credit and financial industry is set to really cope for a disaster like Corona? And how important is this collaboration, of course, between you two now that police officers are very much now on the front line with the virus?
I can maybe go first, and Paul can chip in. And I think, honestly, like, no one knows, right? And we're talking about various different scales of financial crises and what that looks like, and certainly in 2008 this was a lending issue, right? And it was about lending policy, so and affordability specifically. So now more than ever, watertight affordability decisions are just a must. There's just no argument for that to not be the case. And so from that perspective, hugely valuable. I think what we're seeing right now in the immediate term is that a lot of lending is being pulled back. And certainly anything asset based, people buying cars, houses, and things like that, obviously is more or less slowed to a halt. But that will change, and people will start to progressively reintroduce into the market, and they'll be reintroducing into a very different market to the one they left. And so more than ever, their ability to be really accurate and really stringent on how they're lending and be able to satisfy those regulatory requirements I mentioned before, it's a real must. And so I think, as I said before, this is a huge enabler for that. As to when that happens, how it happens, and what credit risk policies look like, I think that's just going to be an iterative, cautious reintroduction to the market. But I'm sure Paul can talk to that.
Yeah, so I think Freddie's right. I think the general scope of what's going to be caused out of this, just from a wider economic impact, is terrifying in terms of what it might do to the front end consumer. I think we definitely share the sentiment that affordability is absolutely key right now. I think traditional creditworthiness methods at the end of this are almost redundant, because what's going to happen to people's credit files, and I know the steps being put in place, but you will have people who have throughout their whole life as a consumer always service their debt with no issue. And there's obviously stigmas around not paying and reaching out for help, but also, the reintroduction to normal life, or BAU, has a real vulnerability around what it is going to do to people. If you think about the first Saturday night in your local pub when this is all lifted, and everyone decides to go out and hammer it, you're going to have those kinds of issues where people are suddenly going to have this sort of enlightening phase of going, well, it's back to normal, and I've always wanted to do this, and while I've been sat at home, I've thought about this and I've thought about that, and this is what I'm going to go and do. And there could be some form of real shift in consumer behavior that we're not even ready for, just because understanding the human psyche is difficult. But you're also going to have the people who've lived through austerity really for a period of time through no fault of their own, and austerity creates vulnerability in decision making. And I'm quite pleased to see the end of some of the high cost lenders during this time already. But I do fear there'll be some reincarnates towards the end of this where they'll be preying on the consumer. And as I say, if we're equipped to make decisions off affordability and not past behaviour, we should be there to support, particularly those in the police, military and prison service. But also, we really hope that there's a sort of wider push by the Fintech community, the financial services community, to sort of use this as a moment in time to draw a line and say, no one should be paying, 200% for credit. There's never a market where that's fair. So hopefully it's going to unite the industry and breed collaboration, which it already has done. And hopefully, we're there to support the nation when we are back to business as usual.
Brilliant, excellent. Well, thank you very much for that, guys. That was quite insightful. I knew very little around these sorts of credit unions before, and it's good to know that you're being quite forward thinking in the way that you approach things like open banking. Where Paul, where can we find out more about you guys?
Serve and Protect, cu.co.uk, and also all the sort of spin-offs, so policecu.co.uk, militarycu.co.uk, prisoncu.co.uk, and obviously all over social media, pretty active there, so, and digital. So on any of those, hit us up. If you can share them, that'd be great.
Brilliant, excellent. And Freddie, where can we find out more about yourself and Credit Kudos?
So we're creditkudos.com. And Credit Kudos on pretty much every other channel. I'm Freddy Kelly, Freddy with a Y, on LinkedIn if you want to reach out to me. Yeah.
I'm sure we'll be seeing you both at all the events in June.
Fingers crossed.
No, but definitely when it all starts to calm down, it'll be good to see you guys at face to face at some places. Well, thank you very much. We'll see you all soon.
Thank you very much. Cheers, Ali.
Thank you, Ali. Take care.